I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour.
This is a watershed moment in privacy enforcement and privacy governance.
U.S. Federal Trade Commissioner Noah Phillips joins us to discuss Facebook's record $5 billion penalty to put privacy violations behind it. And Facebook's announced it's now being formally investigated by the FTC on antitrust. Plus, Facebook marching forward with at least one FTC settlement in its rearview mirror. The company posts second quarter results. Shares are up more than 50% this year, as most of Wall Street says fundamentals remain strong. And Tesla reports second quarter results, the EV maker missing on cutting its losses, and Wall Street reacts. We'll break down what went wrong and right for Elon Musk's car maker. But first, to our top story, Facebook out with second quarter earnings proving yet again the company can grow both advertising and users while feeling the heat from regulators worldwide. Just hours after Facebook announced a settlement with the U.S. Federal Trade Commission to end a probe into the company's privacy policies, practices, the company confirmed it is now being investigated by the FTC on antitrust as well. Facebook was alerted to the investigation in June, but has just now shared this news with investors. This as growth in revenue and daily active users beat estimates, but with its reputation continually under assault. Just how? To discuss, we're joined by eMarketers Deborah Aho Williamson in Seattle and in New York, Techonomy founder David Kirkpatrick. So David, first of all, what's your take on this new antitrust investigation officially by the FTC?
Well, it doesn't really surprise me. We have multiple parts of the government investigating Facebook for multiple things. I think one of the most salient things about the settlement and the $5 billion fine is that Facebook didn't really admit they did anything wrong. And I think we really haven't seen them really show a lot of introspection about why all this happened. And I think that is really telling. And unfortunately, the reason it happened is because they have had very poor governance, and it has sort of bled out into all kinds of areas of their business, and it's causing them long-term ongoing harm.
Well, we're going to talk to one of the commissioners about the details of the settlement and how it'll change Facebook going forward in a moment. But speaking about the numbers, Deborah, with all of these controversies, all of these scandals, all of this scrutiny, how does Facebook seem to keep beating the odds?
You know what? It's the Teflon company. It really is. Every quarter, I say the same thing. They've been able to grow their revenue, grow their user base, despite mounting challenges. And this quarter, more of the same. It's really, really incredible that Facebook has been able to do this quarter after quarter after quarter.
Now, David, I'm going to push back a little on the Teflon thing. They beat on DAUs, daily active users. They beat on revenue. They came in a little light on monthly active users. But do you really think that all of this is not going to impact the company's long-term reputation and ability to grow?
Well, the company's reputation is seriously impaired already. The ability to grow is a complicated question because, as Deborah pointed out, they just keep raking in the dough. They are a brilliantly well-designed advertising platform, and especially for smaller businesses, there really isn't another place to go where results can be achieved that are similar. That's a great thing for this company. But long-term, is it going to affect them? It is absolutely going to affect them. There's no question about that.
Now,
I would love to jump in. I absolutely 100%. Yeah, I'm sorry. I absolutely 100% agree with David on that part of it. I think that the Teflon part of it is their ability to grow their revenue and grow their user base quarter after quarter. I do believe that there's plenty of consumer sentiment issues with Facebook. There's plenty and growing issues with regards to how advertisers feel about Facebook. But the thing is they're still spending there, and people are still using Facebook despite those concerns.
Now, earlier today, Zuckerberg did give a town hall at the company. Here's what he had to say about the settlement with the FTC. Take a listen.
I believe that companies should be held accountable on privacy. And this is what accountability looks like. As part of this settlement, we have to pay a major fine, and there are now very clear rules around how we need to operate on this. And I believe that this is going to help us serve our community better.
Now, the FTC could have sued Facebook. That didn't happen. They could have sued Zuckerberg personally. That didn't happen. They could have curtailed Zuckerberg's professional responsibilities as well. That happened to a very small extent. But David, do you think the settlement goes far enough to provoke, the introspection that you believe is needed as the company continues to grow?
Well, I would probably have to say no, because I do not see enough introspection. I mean, if it takes a $5 billion fine to make a company finally start doing what it should have been doing all along with privacy and governance, that's a very bad sign about the culture of that company. Now, I do see many signs of gradual reform and consciousness raising and changing behavior. I'm not going to deny the company's definitely in a better place behaviorally than it has been in the past. But the fundamental reasons why all this happened has not been addressed. And I think they really had allowed a culture to emerge which really showed very little concern for some basic interests of their users, because they were so thrilled at the amount of money they were making. That's my simple analysis.
Now, Deb, this is really a family of companies now. There's Facebook, the Blue app, there is Messenger, there is WhatsApp, there is Instagram. How do you see growth at all of these different divisions changing in the future? We know that Instagram continues to be a better and better story. We suspect that Facebook proper users, they're getting older, growth is starting to slow down. What do you see?
Yeah, absolutely. Instagram remains a very strong growth engine for Facebook, no question. But that said, according to our forecast, Instagram is still well under 1/3 of Facebook's total revenue, and will continue to be that way in the next few years. So it's not like growth at Instagram is going to suddenly balloon this company up to be much even bigger than it already is. The main part of revenue, the main driving force for revenue for Facebook remains that big Blue app. There is still no revenue going into WhatsApp. There is very limited revenue going into Messenger at this point. So really it's all about the Blue app, and it's all about Instagram at this point, with most of the focus on the Blue app.
All right, we'll continue to follow the headlines as they come in. Facebook's earnings call is underway. Deborah Aho-Williamson of eMarketer, Techonomy founder David Kirkpatrick, thank you both as always. In other earnings news, Tesla shares fell in late trading after the company reported second quarter results. The car maker posted a worse than expected loss and backtracked from a profit forecast. Tesla said it is going to focus on delivering more cars, expanding capacity, and generating cash going forward. We'll break down Tesla's earnings more later this hour. Coming up, back to Facebook's record settlement with the FTC.
This is a watershed moment in privacy enforcement and privacy governance.
We'll hear from FTC Commissioner Noah Phillips on just how he thinks a $5 billion Facebook fine will change how your data is protected, and ask him about the newly revealed antitrust investigation. That is next. This is Bloomberg.
This settlement is the result of an exhaustive investigation, which concluded that Facebook betrayed the trust of its users and deceived them about their ability to control their personal information.
That was Federal Trade Commission Chair Joseph Simons announcing what we all knew was coming, the $5 billion settlement between the FTC and Facebook for years of privacy violations by the social network. Some terms of the deal: increased responsibility by the board to protect user data, but little impact to Facebook's lucrative advertising business. The agreement was approved by the FTC with a 3-2 vote along party lines. I want to bring in one of the officials who voted in favor. And just minutes ago, Facebook announced it is now also being investigated by the FTC on antitrust, a day after the Department of Justice also said it's opened an antitrust probe into big tech. FTC Commissioner Noah Phillips joins us now from Washington. Commissioner Phillips, thank you so much for joining us. So obviously, we just learned about this FTC antitrust investigation into Facebook on top of this settlement news that we heard today. How advanced is this antitrust investigation, and can you tell us anything about what you're exploring?
Emily, thanks for having me. The details of what we do in terms of investigations and in general, even the existence of those investigations is confidential and we don't reveal it. In this case, because Facebook has publicly announced that they are the subject of a probe, I can confirm that there is a probe.
So it is widely known that, for example, Facebook used data that it tracked from its own users to decide whether or not to buy Instagram, to understand that Instagram was becoming popular. Do you think you will use some of the details that you learned as a result of the privacy investigation in the antitrust investigation?
Emily, again, unfortunately, because it's an ongoing investigation, other than confirming its existence, there's nothing that I can say.
All right. So let's talk about the FTC settlement, which I said earlier the vote was along party lines. It was not along party lines. However, can you tell us how the FTC came to this decision, came to the terms of the settlement that we heard today?
Yeah. In 2012, Facebook committed to us and to the American people that would take certain steps with respect to privacy. In particular, that it wouldn't misrepresent the kinds of sharing that was going on with app developers and the kinds of control that Facebook users had over data that they gave to Facebook. It also committed to having a reasonable privacy program. But Facebook broke those promises. It also broke a few other promises. We're here today because we looked at what Facebook had done, and we wanted to send an important message about adherence to FTC orders and commitments to privacy.
So Mark Zuckerberg will now have to personally certify that Facebook is complying with its new privacy policies. How would you like to see his management of the company change?
I think, above all, what we would like to see is a greater focus at Facebook on privacy. That includes Mr. Zuckerberg, and under the terms of the order, he's going to have to focus more on privacy. But it isn't just about Mark Zuckerberg. What this order requires, beyond the $5 billion fine, is attention to privacy at every level of the company. Engineers who are working on projects are going to have to think about the privacy impact of what they do. And if they choose not to protect privacy, they're going to have to explain why. And this goes all the way up to the board of directors. The board is going to have a new privacy committee, which is going to have ultimate authority to oversee privacy at Facebook.
So why not fine Zuckerberg directly or do more to limit his personal authority?
As I said before, this case is not just about Mark Zuckerberg. This case is about Facebook in general. Mark Zuckerberg is a very important person at that company, but he is by no means the only one. We want people up and down the line at Facebook to be focused on privacy.
Now, there are a lot of critics out there who say a $5 billion fine is not enough, and secondly, that the structural changes required here are also not enough. One of your colleagues, Commissioner Rohit Chopra, who voted against the settlement, says it imposes no meaningful changes to the company's structure or financial incentives, which led to these violations. Instead, the order allows Facebook to decide for itself how much information it can harvest from users and what it can do with that information as long as it creates a paper trail. What's your response to that?
To me, there are two really important points here. The first is this. What we do at the FTC is law enforcement. And so what we look at in any case is what do the facts show and what are the legal obligations and did the company break the law, and we try to remediate the violations of the law. We don't come in and simply tell the company what to do about everything. There are a lot of people in America who have real concern about how Facebook conducts itself. That's a fair conversation. It's a conversation that goes on all the time in homes across the country and critically right now in Congress, which is thinking about privacy legislation. But what Facebook was doing in terms of the ad practices or whatever isn't what this case is about. This case is about the misrepresentations that it made to users about privacy and several other things we've talked about. And critically, that's what we're aiming to remedy.
Now, another one of your colleagues who voted against this, Rebecca Slaughter-Kelly, says that the FTC would have done better by suing Facebook and suing Zuckerberg himself. Why not do that?
I don't think that's an accurate characterization of the state of play. The remedies that we have achieved, both financial and injunctive, meaning the changes that we're making to Facebook, are very unlikely to have been achieved through a court process. In a normal litigation, what you're weighing is the certainty of less against the chance of more. In this case, what we were facing is a decision between the certainty of more and the uncertainty of getting even less.
So now, privacy advocates have advocated for bigger changes to how Facebook tracks its users and fundamental changes to the advertising revenue business. Do you really think that the changes made here are going to be enough to change Facebook's practices in perpetuity going forward if it's really not, aside from a $5 billion fine, hitting the bottom line?
That conversation is a really important one, as I said before, and it's part of the conversation that's going on nationally and in Congress about what ought to be allowed and what isn't allowed. But that's not what this case is about. This case is about the commitments that Facebook made and its violation of those commitments. And that's what we're focused on with the relief here.
So let's talk about then going forward. Are you in favor of a national privacy law or not?
That's something I've urged Congress to consider. And I think they're looking at a lot of business practices at Facebook and elsewhere in the economy. I do think Congress ought to take a careful look at this case. They ought to look at the underlying practices. And if one of the things that they think is that, we don't like what Facebook did and they should have changed everything about their business, that's a fair thing for Congress to think about. And that should inform the conversation over national privacy legislation.
So let's talk about the conversation then that's happening between the commissioners, because the chair of the FTC, Joe Simons, has said he doesn't want or believe the government should have broad rulemaking authority, rather targeted rulemaking authority. Is a national privacy law going to be better for users and for consumers in the future or not?
I certainly hope if we adopt any law that it's better for users and better for consumers. In terms of rulemaking authority, my view is that the fundamental decisions in privacy involve real trade-offs, say between competition and privacy. And those are the kind of trade-offs that Congress is best able to make.
So what kind of a law, what details, what fine print of a national privacy law would you support?
Well, I think we have to see what Congress comes up with. I'm very excited to see them come out with the bill and consider it.
Now, let's talk then bigger picture. I understand that you cannot comment on the specifics of an antitrust investigation into Facebook, but in your opinion, do you believe there's a case to be made that Facebook, given that it owns WhatsApp, given that it owns Instagram, given that it owns Facebook Messenger, is too big?
Well, the old saw in antitrust law is that big is not necessarily bad. But it is also true, let's say under Section 2 of the Sherman Act, that where a company has a dominant market position in an antitrust-defined market, there are a series of legal obligations that go along with that. I'm not going to comment directly about Facebook because, as you noted, they have confirmed the existence of an FTC antitrust probe.
Okay, more broadly, Senator Elizabeth Warren has called for the breakup of big tech. She's gotten support from both sides of the aisle. Does she have a point?
I gave a speech about this a while ago, and what I said is that in antitrust, as in elsewhere in law enforcement, what you want to do is figure out what is the wrong and how does the remedy address the wrong. That's a really important conversation to have. My view is that simply saying the same remedy for a wide variety of companies that have very different practices is neither the right answer, it's not going to get to the right outcome, and it's certainly not true to antitrust law.
Okay, now speaking of ongoing investigations, I do have to ask, because it's been reported that the FTC has already reached a settlement with YouTube over violations of the Children's Online Privacy Protection Act. Can you tell us the status of your discussions with YouTube?
As I said earlier, as a general matter, we don't even comment on the existence of our investigations, much less the substance.
More broadly, can you comment on your level of confidence that big tech companies, whether it is Facebook or Alphabet or YouTube, which is a Google company, are they living up to the law? Are they doing what's right by consumers, by children?
Well, let me say the following. The law details what their obligations are, and when they break the law, we're going to be there, and that's why we're sitting here today.
All right, Noah Phillips, Commissioner at the Federal Trade Commission, thank you so much for
Thank
joining
you,
us on a big day. Thank you. Good to have you. Coming up, the year of big tech IPOs continues. Looks like WeWork could be hitting the public market at the end of the year. We're going to have that story for you next. This is Bloomberg. WeWork is looking to September for what could be the second largest IPO of the year. Bloomberg has learned the office space company is targeting a share sale of about $3.5 billion. SoftBank is WeWork's biggest investor. It's valued the business, which is still unprofitable, at $47 billion. Another setback for the self-driving car industry. General Motors' Cruise unit is backing off plans to deploy robo-taxis by the end of the year. GM says it won't be able to validate the autonomous car's performance and safety in time for 2019. And coming up, Tesla sputters. Shares of the electric car maker fall in after hours trading after the company reports a worse than expected second quarter loss and backtracks on its profit forecast. And Facebook's earnings call still underway. Take a listen to Mark Zuckerberg telling investors about the $5 billion fine his company will be paying the FTC as part of their settlement.
I want to talk about the recent news that we reached a settlement with the FTC over privacy concerns. As part of this, we've agreed to pay a $5 billion fine, but even more importantly, we're making some major changes to how we build our services and run this company. This will require investing a significant amount of our engineering resources in building tools to review our products and the ways we use data. It will also significantly increase our accountability by bringing the process for auditing our privacy controls more in line with how financial controls work at public companies with Sarbanes-Oxley.
Technology. I'm Emily Chang in San Francisco. Tesla posted a worse than expected loss and backtracked from a profit forecast. Cash and deliveries emerging as the biggest challenges to growth. Joining me now, Max Chafkin of Bloomberg Business Week and Tesla analyst Ben Kallo of Robert W. Baird on the phone. So, Ben, you've gotten outperform. What's your take on these headline numbers?
Well, I think that the $5 billion on the balance sheet is a great number. I think margin is probably why the stock's down, but I think margin is actually, if you go through the numbers in detail, is better than expected. And I think forward guidance of being of GAAP positive on net income is also good as well. So it's kind of an overreaction to the downside, in my opinion.
Well, if it's an overreaction, it's a big overreaction. I mean, shares are down 10% right now. Max, there's a disappointment here on profit. The company turned profitable at the end of last year. That reversed at the beginning of this year. Elon Musk said the company would become profitable again later this year. It looks like that's not going to happen.
So they're still trying for it, and so it should be said that there's sort of two things going on with Tesla. One is that they've been pushing like crazy for volume. They want to be, a large volume car manufacturer, one of the biggest car manufacturers in the world long term. And this car that they're selling, the Model 3, does not have great margins. It seems they push so hard to get the price down to that magic $35,000 base price. Got there. It's come up just a tiny bit, but the margins are super tight on those low-end cars. And as people buy the cheaper Model 3, they're moving away from Tesla's more expensive cars, the Model S and the Model Y. So there's this pressure on profit that is at the very least a near-term problem. And critics of the company are going to say, well, no, this is a long-term problem. This is a company that's going to have a really hard time getting to profitability.
Ben, is it a near or a long-term problem?
Well, it's not true that like the Model 3 is that they actually had better margin quarter over quarter X credits, which is what everyone wants to to look at. And so it's not true that they're making improvements on the gross margin here. And so I'm not sure what that statement is.
Max?
Yeah. I mean, the company is not profitable right now. They obviously like to get profitable. I think in the long run, they want to be more efficient in the factory, be more efficient in their operations. That's the message we've been hearing from Elon Musk basically for the last year. And then they want to get these new cars out, the Model Y, which could be a huge boon for the company. That's the category of car that most Americans are buying, and also getting to China.
It's the cheaper SUV. What's the status of it?
They're working on it.
Is it going to be here next year?
I think
Inquiring minds want to know.
I don't have any inside information. I think it's certainly the big effort that Tesla's doing right now on top of building a gigafactory in China, which would be huge because the Chinese market is the biggest market in the world for electric vehicles.
Ben, what's your take on how much China can change the Tesla story as they continue work on this factory, as they're continuing to try to get new models to the market?
So we don't have any production in our numbers from China this year. I think what's most underestimated about everything here is the brand in China and how it's kind of become a wildfire there, and how many cars they can sell, and I think that's upside. And just back to the cash flow they generated during the quarter, this a couple $100 million. So this idea that they don't make money is completely wrong, and the headline needs to change. There's $5 billion in the balance sheet. They're not going out of business. You have other OEMs that have really hard problems and restructuring problems, and it's not Tesla. It's XYZ German manufacturers that are getting their lunch eaten by Tesla.
Now, there's a point there, Max, in that if you talk to people who own Teslas, they love Tesla. They love their cars. They're not focused on the ins and outs of whether or not the company is making money, how many deliveries they're making, what production is looking like. And so how much does that matter?
It's huge. I mean, making a good car, if you're a car company, is definitely the most important thing. It's more important than anything else. And I think, to Ben's point, one thing about the conversation that has changed around Tesla over the last year is, about a year ago, there were people out there saying, this company is doomed. They're never going to get to volume production. And now the debate between the bears and the bulls is a different debate. Is Tesla a niche manufacturer? That would be the bear case. And then the bull case is, this is a company that's going to be bigger than Toyota, Daimler, and so on. And that is, if you're Elon Musk, that is a good shift in the conversation. You don't have as many people, as many sane people going around talking about this thing, collapsing any day or whatever, which was happening a year ago.
Talk about a shift in the conversation. He's been a little bit more restrained on Twitter, let's say, since his settlement with the SEC over how he's communicating with the public on social media. Ben, what's your evaluation of Musk's leadership, given some of the hiccups over the last year?
So I think people want to invest with Musk. I think that him being more restrained or quiet is helpful. I think that being cash flow positive is helpful, and having $5 billion on the balance sheet is helpful for the growth managers that haven't been paying attention or can't own this or are avoiding it to come back and buy it at a lower price than whatever a year ago when they weren't where they were with all of the catalysts coming up here.
All right, Ben Callow, Robert W. Baird, Max Chafkin for Bloomberg Business Week. We're going to continue to watch the headlines and listen in on the Tesla call and bring you any headlines as we have them. Now, a story we'll continue to follow. Uber has announced that board member Arianna Huffington is resigning. Huffington tweeted, quote, "Today I told my fellow Uber board members that given Thrive's growth, I will no longer be able to give my board duties the attention they deserve, so I will be stepping down. I look forward to watching Uber go from strength to strength. Huffington joined the board when former CEO Travis Kalanick was still in that chair and was instrumental in helping to find a new CEO and getting the company back on track with some of its cultural issues. Coming up, Facebook's new era. That is what Mark Zuckerberg says is in store for the company after its record $5 billion settlement with the FTC to settle privacy violations. But will that be enough to keep lawmakers and investors happy? We'll discuss next. And as we head to break, Zuckerberg participates on the post-earnings call, providing details about the new privacy board involved in the settlement with the FTC. Listen
We will now also have a new privacy committee of our board that will oversee our privacy program and work with an independent privacy auditor that will report to this new committee and to the FTC. We're asking one of our most experienced leaders in product to take on the role of Chief Privacy Officer for product, reporting to me and managing our privacy program. We'll also be more rigorous in monitoring developers who access data through our platform.
And now back to Facebook. CEO Mark Zuckerberg told employees at a town hall that the company's $5 billion settlement with the FTC has changed the game.
This is a new chapter for the company. Privacy is more central than ever to our vision for the future, and we're going to change the way that we operate across the whole company, from the leadership down and the ground up. We're going to change how we build products, and if we don't, then we're going to be held accountable for it. And this is what accountability looks like.
But has it changed the game? To discuss in Washington, we're joined by Bloomberg's Ben Brody, who covers tech's corporate influence in the Capitol. And here in the studio, we've got Ashkan Soltani, former CTO of the FTC, and Jenny Gebhardt, Associate Director of Research at the Electronic Frontier Foundation. So, Ashkan, what is your reaction to the settlement?
My reaction is that aside from the monetary figure, which is notable for the FTC, although not really notable for Facebook.
Which makes $56 billion a year in revenue.
That they essentially won on all the other counts, right? The
Facebook won.
Facebook won on all the other counts. Like the injunction. So there's 4 attributes. One is monetary. Second is what amount of personal liability there is on the CEO and C-suite, which we've seen other than the board reporting certification. There's very little. There's the injunctions or remedies on bad behavior, which are often essentially just more of the same, that Facebook can't deceive consumers with regards to how it uses consumers' information. And then ultimately, the scope of what they are indemnified for is incredibly broad, right? So the settlement included this very kind of noteworthy provision that said all matters in front of the FTC prior to the settlement date, they're indemnified for, which is pretty unique. I don't think I've ever seen that in any other FTC settlement. You typically see something like that after a case has gone to trial, but they got that in the order. And more importantly, Zuckerberg wasn't even himself deposed, even though he appeared routinely in the documents that the FTC looked at and is cited in the complaint.
So you think they should have talked to him directly?
Absolutely, yeah.
Jenny, where do you think the gaps are?
I think, one of the huge gaps is in one of what seems like a win. One of the silver linings is that the FTC has mandated that Facebook can no longer use 2-factor authentication phone numbers for targeted advertising. And that's great for what it is. So
let's just remind our viewers what 2-factor authentication is. So for example, if you forget your password or something, or you're trying to verify yourself on a new device, Facebook will ask you for your phone number, right?
There's
and send you a code.
There's a couple different ways that you can use your phone number for security. One is 2-factor authentication. So in addition to putting in a password, you put in a code that you get on your phone, often through a text message. Or you're right, if you forget your password, Facebook will send you a code via your phone number. If there's a strange login, you'll get an alert via the phone number that you gave them.
This is used by many, many, many companies.
Absolutely, yeah. And 2-factor authentication broadly is, for most people, most of the time, a security best practice. It's a critical thing to use.
But what happened here is that somehow advertisers got hold of these phone numbers that Facebook was getting from users for security purposes and then targeted users based on their phone numbers. correct?
Exactly, yeah. And that confirmed the worst fears of a lot of users who need the protection of two-factor authentication the most, who are also concerned about their privacy, right? They have both security and privacy concerns, as most of us do. So in my own work training kind of high-risk people and trying to get them to trust two-factor authentication, this news that Facebook was using those phone numbers also for privacy-invasive advertising really set back and undermined those efforts to get people more comfortable with and trusting this kind of measure. So the good news, right, is that the settlement said that Facebook can no longer do that. But it left some holes as far as other kind of phone number abuse that Facebook is doing. So it didn't say anything about shadow contact information, which is when your friend uploads your phone number and that becomes associated with you, a phone number that you never gave Facebook directly. It also didn't say anything about ways that two-factor authentication numbers have been exposed to reverse lookup publicly, right? So if I'm uploading my contacts and that includes a phone number, it could be linked to a Facebook account that used that phone number for two-factor authentication, but maybe I didn't know that person had that account. So there's just different holes there. So it was kind of an incomplete win.
Ben, what's been the reaction to this in Washington?
I think a lot of folks, I would describe it as sort of tepid to deeply skeptical. There's a group of folks, some of them in the mainstream privacy community, some of them Republican lawmakers who have said, yeah, you know, this figure was pretty high. They're changing the board. Let's look and see if maybe this is enough. But, you know, we want to keep on top of the FTC about this, and we want to keep pushing privacy legislation. Then you had Democrats and sort of privacy hawks who just were firing off all the color that they could, all the metaphors. You know, you call it a pinprick, you call it a slap on the wrist, you call it a fig leaf settlement, you call it whatever you want. I think the common thread was, and this was true even of the commissioners, was saying, you know, it really is beyond time to pass privacy legislation. That isn't necessarily going that well on the Hill, but that if we are able to do that, we could have given the FTC some of those powers that I think even the Republicans on the commission were sort of lamenting that they didn't have as they went through this investigation.
Meantime, we've heard from a number of the commissioners today, including Noah Phillips, who we spoke to earlier. Take a listen to what Commissioner Christine Wilson had to say about the actions against Mark Zuckerberg in particular.
We do not have the legal authority to remove Mr. Zuckerberg from the driver's seat, but we have imposed a robust system of checks and balances that extinguishes his ability unilaterally to chart the path for consumer privacy at Facebook. We have required that privacy risks be taken into account at each fork in the road, and we have mandated heightened protections for certain categories of products and services, including those directed at minors.
Do you think Zuckerberg's power has been limited enough? You know, he's talking about this being a new chapter for Facebook, and it's hard, given how many times Facebook has violated user trust, to believe that they're really going to change their ways or change their approach to privacy, even as they appoint a new chief privacy officer.
Right, who wasn't a privacy expert, right?
Exactly.
Who's just a product person. I think that the challenge is that the order and the stipulations in the order don't necessarily require Facebook to prioritize privacy over all else. It simply requires that the company be truthful or not be deceptive again in the ways it collects and uses consumer information. So to your point, they could actually request phone numbers, the same phone numbers they use for two-factor authentication, and use it for targeting. They just couldn't do it under the guise of solely collecting it for two-factor authentication, right? The Section 5 authority says basically that companies can't they can't be deceptive about their practices, but nothing prevents them from being transparent about their practices and going ahead and doing so.
Now, there are other things coming down the pike that Facebook has already said it's going to do, like merge the back end of WhatsApp, Messenger, and Instagram. You know, Jenny, I know you believe this is deeply problematic. You know, what other major privacy issues do you see down the road that have already been basically teed up?
Yeah, I mean, one huge one with WhatsApp, Instagram, and Messenger merging is the issue of merging those three identities for people: your WhatsApp number, your Facebook authentic name, and your Instagram pseudonym or handle. Facebook has promised that will be opt-in when it rolls out, but Facebook has a history of reneging on privacy commitments. I think looking at their privacy policy alone over the past 10 years is a study in the art of the bait and switch. So we'd like to see really some kind of limitation that Facebook will stick to its word that if it says it's going to be opt-in, it's going to remain that way. And it's not going to be the case that in 2 to 3 years, users are surprised by a new privacy policy that says you have to merge all these identities to continue using these services, something like that.
Now, Ben, quickly, what do we know about the FTC antitrust investigation into Facebook that Facebook just announced and Commissioner Phillips just confirmed?
Yeah, absolutely. We don't know a lot about it, and I sense that Commissioner Phillips may not know a lot about it either. It's early days, but when the FTC starts an investigation like this, what they basically have is a credible reason to believe that there may be a violation of the antitrust laws, that there may be consumer harm that they need to look into. So that is what this investigation that Facebook has disclosed and the FTC has now confirmed, that is basically what that means. That's about all we know right now. We also know that FTC talks to European regulators, so they may be taking some cues there, but often they want to go their own way. So it really remains to be seen what's going to happen.
So what do you, as someone who worked at the FTC for many years, what's happening right now?
I mean, so it's quite likely that the commissioners don't yet know if it's at the staff level, right? They were probably briefed on it, but they probably don't know the details, and that's by design, right? They're supposed to keep a wall between investigation. I do know, like the practice you just described, in antitrust terms would be bundling, right? Requiring that accounts from one account be forced to use a different product, right? So if you have a WhatsApp account, you would be forced to use a Facebook account. That would be bundling. And so there's a number of factors that the FTC could be looking at with regards to the antitrust investigation. I think the most critical piece, which is I think when you asked the commissioner himself, is that to what degree are the different, so the FTC has multiple components. There's the Bureau of Consumer Protection and the Bureau of Competition and the Bureau of Economics. The Consumer Protection and competition bureaus operate independently, right? And so the question will be, to what degree are they overlapping and sharing information from the consumer protection investigation with the competition investigation?
Interesting. All right, fodder for the next few months, maybe years. Ashkan Soltani, former CTO of the FTC, along with Jenny Gebhardt of EFF and our own Ben Brody in Washington. Thank you both. Thank you all, I should say. Still ahead, eBay is making another effort to compete with Amazon, this time pushing the limits on delivery speed and costs. Our conversation with eBay CEO Devin Wenig next. This is Bloomberg. eBay announced Wednesday it's launching a service that will allow merchants to store inventory in various warehouses throughout the United States. This narrows the delivery gap in competition with Amazon. eBay also says it's feeling pressure related to an internet sales tax now recognized in 19 states. Bloomberg's Vonnie Quinn talked to CEO Devin Wenig and asked him about the impact.
Well, there's no doubt we've seen a headwind from the rollout of internet sales tax. That will continue as more and more states roll it out until we fully implement it and then work our way out of that next year. The beginning of the year, no states had an internet sales tax. Right now, there are 9 that have implemented. There are 30 that have declared. I think it's a terrible policy. I think it's a regressive tax on small business. We've been advocating on behalf of small business for quite a while. It's the only tax that I know of where states effectively are taxing people out of state that can't vote for their politicians. So I think it's a bad policy, but at the end of the day, it is what it is. We comply with the laws of states, and if they implement a tax, we'll collect it on behalf of sellers. I think practically what it means for our business is there will be a U.S. headwind as these taxes roll out. And most states are between 5 and 10% at checkout. And that, along with tariffs, is another headwind on the American consumer. It will be in effect until we lap it, which will be at some point next year.
Right, Devin, I did want to get some more thoughts on the trade war and how it's impacting business both for sellers and buyers on eBay, and whether you're seeing the departure of some stores.
It hasn't impacted us directly because most of the goods that we sell have not been tariffed. But I think that friction in commerce is not a good thing. When I come to a conference like this, what I see is the engine of U.S. job growth. I'm here with thousands of small U.S. merchants who use eBay as a platform, and they're hiring. They're growing faster than other businesses. They're hiring, and that's the engine of growth. 95% of the sellers that I'll be with over the next 2 days sell cross-border. They sell most of them to over 25 countries on our platform. So when we put friction on that, it's not eBay that suffers, it's a small business in the Midwest that's trying to hire and trying to sell around the world using e-commerce platforms like our own. So we're advocates of free and fair trade. We're advocates of low friction because I think that when we see low friction in trade, the U.S. economy wins, and particularly small U.S. businesses win.
That was eBay CEO Devin Wenig. And to clarify, the internet sales tax policy is currently in 9 states thus far. That does it for this edition of Bloomberg Technology. Reminder, we're live streaming on Twitter. Find us there at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.